Okay, thank you very much to our wonderful speakers. We are absolutely charging through this day, and we have another panel up next. We have some incredibly important guests that are about to be joining us on the stage, and I'm sure you are very eager to hear from all of them. So the next panel is the Bankers' Dialogue, and we will be discussing the very important topic, will Pakistan's financial sector deliver? This will certainly be a highly insightful conversation. So could you please help me and welcome our esteemed guest, Mohammed Nasir Salim, who is the President and CEO of HBL, Rahmat Hasni, the President and CEO of the National Bank of Pakistan, Ahmed Khan Bozai, the Managing Director and City Country Officer of Citibank, Karam Shahzad Khan, who is the President and CEO of Habib Metro Bank, Mohammed Atif Hanif, who is the Chief Executive Officer of Al Baraka Bank, Pakistan Limited, and Imran Halim Sheikh, the Deputy CEO of Bank Islami Pakistan Limited, and our moderator, who is Ali Khazar, Director of Research at Business Recorder. Please, let's give them a very warm welcome.
Good morning, everyone. Thanks for joining us for this session. It's been a very great conference and event arranged by Nutshell and team. I must appreciate Azwar and the team to do this wonderful job and keeping the bar high every time they do this conference. So the topic we have is about is one very close to my heart, and of course the gentleman sitting over there, they are very much into it as well, and it's about the financial inclusion and about what is the future about the banking in Pakistan 2030. We know that the Pakistan private banks started thriving back in days. Then nationalization came, and all banks were nationalized, and then in 1990s when the privatization started as well. So banks started moving up towards the financial inclusion, and they've improved their the risk management and enhanced the deposit mobilization and lending. But after the 2008 crisis, the effort seems to be fizzled away for the host of reasons, and the fiscal deficit is too high. That's why they've been borrowing to the government in mostly, and many banks have become a deposit shop, and the earning had become the treasury. So whereas the corporate lending and the SME lending and the consumer lending came at the back burner and all something. So the way things have moved up now, Pakistan economic cycle is going through another wave now, as explained by some of the economists yesterday as well, that after 2004, in 2024, we have a primary fiscal surplus for the first year, and then we expect a primary surplus of 2% this year, and what the IMF targets are to continue with those kind of surpluses and all that. There are taxation implication and all other factors which some of you mentioned, but one good reason is this provide liquidity for the banking sector to move towards the private sector, because the government borrowing imprint is perhaps going to reduce in the next few years, and with interest rate falling down, and with sooner or later the economic growth will revive, that would entail banks to move towards the private lending and all that. So this is starting on a good note, that after about 20 years, we're getting back into the cycle where private sector lending can increase from the banking. And if I remind you of that, the private credit to GDP was about 27% or something in 2007, and it has moved down to 10% or something now. The advance to deposit ratio of one of the bank, the Faisal Bank, was in 90s in 2007, and many banks were about in 80s and 70s and that. And today, all the banks are struggling to even reach 50%, and government has imposed tax on it as well. And but there are reasons which are beyond the bank control, the macroeconomic factors and all that, which push them back. But those macroeconomic factors are now moving in a favorable direction. And another good thing is about it's happening of the digital revolution in Pakistan, and it's a global revolution and all that. And the State Bank has issued 5 digital banking licenses, and and all the commercial banks are really geared towards moving toward the digital inclusion. And one of the biggest bank CEO who happens to be finance minister now, he used to say that when he was a banking CEO that my bank is an IT company, not a bank. So that kind of a focus of the banks have on digital penetration and using digital tools to enhance financial inclusion, to attract more deposits and move towards the lending and all that. So in that perspective, I like to see how things would happen in the next few years with the gentleman sitting over there. They are one of the best bankers around in the country, and that's how things would be. So I moved to some of the bankers and all that, and I move the way they are listed in the list without giving anyone as a preference or something. So first I moved to the Nasser Salim. He is the president and CEO of HBL. And so Nasser Saab, tell me about your predecessor used to say that you are an IT company, not a bank. So how you do move towards that? Plus your bank is focusing very much on the agriculture side, and you created an agriculture company in that where you're working on that. Plus the financial inclusion is something Aga Khan Group and Sultan Alana has been talking about for many years, and HBL is not really towards the bottom line as many state-owned banks are doing it. They move towards all the quality of the assets and more towards all the financial inclusion. So how do you see yourself moving into 2030, and how would you enable more SME financing in the agri space going forward?
Thank you. I think I like the preamble in the introduction better, because that actually gave a full background of how the banking sector has evolved. So I think the first one is a very easy gimme. I think the current finance minister, former CEO of Habib Bank, would be happy to know that we still continue with the same mantra, that our aspiration is we're not a bank, we're a technology company with a banking license. So throughout the 2 days, you've heard a lot about digitization that is happening. So whether it is fintech, regtech, agri-tech, biotech, anything now has a tech component with it. So we simply can't escape that, and we do need to internalize it and use it for the betterment of the country. That's the first one. When you look at our agri, we are the #1 among the commercial banks in terms of our portfolio size in agri financing. However, when you look at the total bank finance to the agri sector, it is about 5–6%. You add some of the ancillary agri-related entities, you're still less than 10%. So 90%, is still not served. There is a middleman that takes a lot of it, and more importantly, our farmers at times do not have, the right tools and or the right knowledge to scientifically grow crops, which impacts the yields, which also impacts the quality of the crop, and hence the prices that they fetch for it. So what we are looking at is, we decided to take a more rural approach, set up a separate company, which is HBL Zarai Services, that really focuses on providing quality fertilizer, agronomist support, provides a digital network around what we call a dera, which is about 20–25 square kilometers, where we use our digital wallet and our dedicated merchants or Kiryana stores to allow them access to the financing that we're giving them. Our earlier interventions of this nature, before we formed Zarai Services, we were actually able to increase the crop yield by 40%, and we were actually able to put more money in the growers' hands. On the other side, we have roughly, anywhere between 14–25% of market share of all banking. A lot of the buyers for these agri products are also our customers. So we've also created that bridge where we can do smart and easy methods of doing so. The other element which we've done not so well as a banking sector, but we need to get better is how do we do collaterals for the agri-produce, and how do we create better storage for it so that the farmer does not have to sell the crop immediately after the crop is reaped. So that will also make a big impact. Clearly, when you talk about the backdrop of policy rate, and we just had an MPC reduction, what we're going to see is a renewed interest, and actually the financing being channeled back into the right mechanisms, which is not to really support government expenditure, but is really directly to impact the economy of Pakistan. So I think that step by itself is positive. When we start looking at the agenda, and for HPL, really our agenda is built around helping shape Pakistan's economy, because we truly believe that if Pakistan is strong, then HPL and everyone else and all the inhabitants benefit from it. So this is really what drives that focus that you mentioned towards the end. How digitization is going to help financial inclusion, is really through developing the flows. And with one of my previous employers, our mantra used to be, if we can capture the flows, we can monetize those flows for the greater good and be able to put them to good use. So when you look at large corporates, nowadays most banks offer portals where their transactions take place digitally. So you've got the flows, you've got the numbers. In addition to their published balance sheets, you can make risk-based decisions just on the flows between the various counterparties. When we start looking at large corporates, and we start looking at suppliers, and we start looking at their distribution chain, those are now all more or less for large FMCGs are digitized. There we are able to see the flows, and we're able to do supplier finance or buyer finance because we know what kind of flows they're doing. We also have the history from the corporate. They've been working with them for this distributor for 5 years, 10 years. There's confidence. The next level, which is where the question was, I can speak for HPL. We have a wallet which is a Connect app, but now we've started micro collections, right? And what that does is it starts creating that undocumented transaction between distributor and the retailer, the Kiryana store. Those flows start becoming more transparent. So even if we don't have collateral, I can see the history of what this Kiryana store has been, spending and selling. And therefore, I can extend finance that allows this to grow. The second piece that we need to look at is, we always talk about a particular entity. We don't look at it over a point in time. What we have to do is grow this entity. So one day this entity, which is a micro SME, has to become the S part of the eco chain. And that is where in successful countries, banks come in and help with financing and giving them a vision, giving them a scope that how they can expand their business. The second is, how do you take that to make it a medium? How do you take the mediums to be commercial? And that's how you take this forward. The second thing is, banking sector does not work in a vacuum. So we need to also work collaboratively with the regulators, with the government, to make sure that the oversight regulations as well as the country regulations are business friendly. Clearly there was a discussion around the corporate taxes. I think that's one of the stated objectives of the government and the finance minister, that over a period of time that base will be expanded so that it is really far more equitable, and a lot of the inconsistencies that come through are removed. Thank you.
And you rightly put about the last things about the tax rates and all that, and that's one of the biggest impediment. But but that's how we are going to live with the next couple of years, and I don't see that your ADI text going away anytime soon. So that's something you need to put, you need to think about how this the reduced government borrowing going forward, how would channel then into the productive sector and the private sector. Now I move to my next panelist, Rahmat Hussaini. Yes, he's the President CEO of National Bank of Pakistan. So after this, the privatization of banking started at about 1990s. The government of Pakistan chose to keep one bank with it. That's the National Bank. And so the rest of the banks which moved to the private hand for the shareholders, they created some values, as you see the market capitalization of HBL, MCB, and Mizan and other banks and all that. And but when we see about the National Bank, it's not there. Perhaps it's working more towards the other stakeholders, the depositors and the lenders and the government. So what? Now, so this one niche, we perhaps need to have that one bank remain in the government sector. So we are very much for the privatization, but perhaps one bank needs to be in the hand of the government to do kind of work which private banks are not doing. So going forward in future, using digital means and other means and the kind of mandate you have is to move towards the broader stakeholders. What is the plan of the National Bank to do what other banks are not being able to do that?
Thank you, Ali. I think we were, in the sense that when we talk about two major terminologies that we use, one is financial inclusion, and the other is access to finance, as the buzzwords right now, and then digitalization. The three concepts are relevant now, but for National Bank of Pakistan, we've been around for 75 years. And since the 60s, we were mandated to do financial inclusion even before financial inclusion became a term. And that started with us being told to, or asked by the government to open a branch in every district and etc., which other banks did not have. So we were reaching out to customers to bring banking to the customers and to the masses. And that kind of activity has continued throughout 70s, 80s, 90s. And then post the privatization, it became, and then there were one, there was one, right? Public sector bank, large, had specific mandates. And now, as we go forward, we look towards the digitalization of those mandates. I don't think, given our constitutive documents, which are available to all shareholders also, and the shareholders buy into that as what they invest in is that, a bank which also has A, B, C, D mandate. And in that respect, we continue with that, but with a move towards digitalizing a lot of the processes that perhaps obviously were manual, and people had to come to the bank branch to do their business. And as that digitalization of processes and customers continues, obviously that more and more services will be offered to them on the digital platform. But as a bank, we shall not veer away from our mandate as an agent of promoting financial inclusion and access to finance in a sustainable manner for the bank, so that the shareholders, as you talk about, do receive and continue to receive a return on equity. I'm not talking dividends, Ali. And that the bank has continued to do throughout, even to date. I think the necessity of having a bank, as you asked, of our nature, I think is recognized. I think by my colleagues also, and as well as the regulators. Many a time we've had an opportunity to coordinate in the past, collaboratively, to in the better interest of the country, be it in making available cash, as simple things as making available cash to other banks to do their work, be it other transactions which are of a national interest nature. But certainly we stand there, not saying that we won't do stuff that the other banks do, but that our responsibilities as a bank are perhaps a little more. And in the sense that the canvas that we have to operate on is slightly perhaps larger than my friends on this panel is. So that's what we are about.
Great. So I wish you best for the larger and people are appreciating that, and they expect National Bank to do what others cannot do or may not be able to do it because of their commitment to their shareholders more than the stakeholders.
So let me put it that way. So if it is about agriculture, SME, those are the others. We continue to work on a very broad canvas on those also across the country, and that is available for the public in terms of data that the State Bank even makes available as to where we are operating, where access to finance has been made. So I'm very proud of the fact that the bank is operating for SMEs or agricultural lending of the very small lenders all across Pakistan, be it Para Chanar, be it Gwadar, be it Gilgit. So that ethos for us is very important, that we are able to deliver that forward.
It's heartening to know that. So, this is the right kind of flavor we need, that the private banks and the public banks, and then we have another flavor which we have is about the presence of the foreign banks. I mean, in 1990s when Pakistan, the banks were privatized and deregulated, so the bank who really came into the foray through consumer banking, which introduced the consumer banking, the credit card and stuff like that, was the Citibank. And the Citibank nurtured bankers, became the president of many banks, and still they are presidents of some banks which have worked in Citibank and all that. So, but over the period of time, especially after the 2008 crisis, the Citibank and the other foreign banks' presence started fizzling around. They started reducing their presence in Pakistan and all that. So, but they have the experience. They know the market, especially the Citibank knows the market, and now when the tables are turning, as I've said that if you go back to 2004, I somehow compare it to the 2024. I may see 25 to 28 is somewhere like 2005 to 8, and at that time Citibank was instrumental. Even in 90s, it was instrumental in terms of introducing the flavor of the consumer lending into Pakistan. Now the digital side and the corporate lending and connecting to the world through, especially to the value chains, as Pakistan has to move towards the export and area. Pakistan has to enhance its trade. We total have a trade about less than $100 billion a year, and international trade, which is peanuts. And the banking has to play a role in that. So I go to my next panelist, Ahmed Khan, who's managing director of Citibank in Pakistan. So how you see Citibank and perhaps the other foreign banks in Pakistan help in shaping the future of the banking?
Thanks, Ali. Assalamu alaikum, everybody. So I think it's one of the many tragedies in Pakistan and the lamentations that we have, that when at least I started my career, we had at least a dozen international banks present in the country. I started my career with American Express Bank. Tawfiq Saab is the CEO, was my first boss sitting here. We had Societe Generale, we had Credit Agricole, Bank of America, ANZ Grinleys, ABN AMRO, Barclays, you name it, and we had them. And this was, by the way, very unique in the region, because a lot of countries in emerging markets did not have that many foreign banks present, and we had that leading start. And the reason was, in some cases, historical. We were a colonial outpost during partition, and we had a lot of institutions from those countries, whether it was the French or whether it was the Germans who had set up posts in this country. But over time, two things changed. One is the strategies of these global banks changed, and the second thing is we changed, and we being Pakistan. I think we all know, so it's no secret, we'll talk about it openly, that Pakistan drifted from the early 90s to where we are today, and the world moved on. Banks, international banks in particular, became a lot more discerning about where they apply capital and what return they get. Traditionally, we look at capital and the return on capital in a very different way than local banks do. We apply a risk measure to the amount of capital that we invest. So a simple measure like ROE is not good enough. We have to look at how much tangible common equity we have to put in. We have to assess how much risk capital we put in and economic capital we deploy. So on those measures, things with Pakistan's credit profile deteriorating, it started becoming very difficult for international banks to operate here. The second thing is, as you mentioned, which is a positive side in some way, is that they started to get healthy competition from the likes of my peers around the stage. There was privatization, the local banks started getting more aggressive, they invested in technology, they invested in talent, they invested in systems. And so you had if you were a subscale small operator, international bank operating in Pakistan, you didn't have the balance sheet, you didn't have the pricing power to compete with the local banks. So a mixture of all these factors led to, unfortunately, an exit of a lot of foreign banks. Now, coming back to specifically Citi, because you asked the question, we've been here since 1961, one of the oldest foreign banks in the country and the only American bank in the country. Our primary target market is to deal with global multinationals, and that's just not the likes of the Pepsis and the Cokes and the Nestle's and Unilevers, but it's also international investors. In the last couple of years, we've seen significant inflows come through in either whether it was the equity market or the fixed income market, and all those investors want to channel their funds and execute their trades via institutions like Citi. So institutions like Citi then become a gateway for international investors, be it issuers or institutional investors. Secondly, which I think is another very interesting and exciting development, which is great for Pakistan and good for banks like us, is I think what this crisis over the last few years has taught us is that local groups have to think globally now. The old economic model and construct that we had is no longer good enough. If we have to compete, we have to compete globally. We have to grow and go global, which means that more and more we're having conversations with local groups who are wishing to set up activities in Mexico, in North America, in Europe, or parts of Asia. And guess what? If you are a mid-sized exporter wishing to establish a business in Vietnam, for example, it's going to be difficult. We all carry a Pakistani passport. We carry the baggage that, unfortunately, some of the press carries with us. So how does that exporter navigate that market? Guess what? Citi helps them because we have knowledge of who you are and what you do here, and we have a presence in Vietnam as well. So we bridge that gap. I'm very excited with this development because I think in the last couple of years we've had inquiries coming from local groups in multiples of dozens, whereas we never used to get these inquiries in the past. Our local groups are very inward focused. So now we're having these discussions. The next step and evolution in that is, okay, now that a Pakistani company has set up shop in North America, how do they grow? Well, guess what? Again, we'll help them, right? And having that local connectivity, that global outlook, those relationships that we've developed over the last 60 years, and the insights that we bring as global banks is what I think our local corporate sector needs more of.
Great, great. So that kind of amalgamation we have with the foreign bank experience and the thrive of the local banks and the pricing power and the sheer presence, so that can really help in moving forward and help in connecting to the global value chains. So the global value chain and the trade is so important for any country, and for a country like Pakistan, trade and finance related trade is extremely important and all that, and there needs to be have specialized banks to work on that way as well. And fortunately we have one specialized bank, a couple of specialized bank in Pakistan who focus on the trade. They're less focused on the consumer side and all that, and they're doing a pretty good job over the period of time, and they slowly move towards and as gaining size from that. And the one once used to be Habib Bank, then this after nationalization and privatization, there's a few banks they made, and one of them was this Habib Metro Bank, and its president Khurram Shahzad Saab is here, and we're talking about the trade, and your bank is really focusing on the trade. How can the digital means and connect to the trade finance, and how can this help in developing local as well as global value chains in Pakistan?
So thank you, thanks Ali. So you've described it correctly that we, just one correction, we do every other thing, but we focus on trade. We believe that trade creates wealth. Trade creates wealth among countries. Trade creates wealth among individuals, among companies. So we, by facilitating trade, by financing trade, we think we create wealth, which is a far better way of wealth creation than some of the other financing means available for this wealth creation. It's not just a chance that these countries of East Asia, whether Northeast Asia and now for last 20 years, Southeast Asia, they've been growing wealthier countries. Trade lifted them out of this poverty. Trade lifted their large corporations out of this poverty. One of our largest trade segment in Pakistan and for Habib Metro Bank is textiles. You go to any Asian large corporation, including, by the way, Japanese, you will find that they have their genesis in textiles. They started with textile, then they moved into other technology, and some of them have become really big names in technology. So coming to our own, this part of the world, we believe, and so we chose this, we believe that trade is a great equalizer. We believe that trade finance can lift smaller companies into bigger conglomerates, and bigger conglomerates into international conglomerates. Something to what we are now seeing, what Ahmed just mentioned. I mean, that trend is really healthy, because for the first time, they will be, our corporates will be facing this international competition head on. The way to make it, so trade has seen a lot of digitization over the years. It was in Pakistan relatively slow starter. We had, after an initial burst of digitalization technology, it had petered off a little bit. However, now we are seeing new products. Now we are seeing new ways of this trade finance. The most important being the supply chain finance, in which somebody's supplier is somebody's vendor. So that whole chain, that financing, so you can start from a very low level, which is maybe an SME supplying to a mid level, and then from that level to an international trade. That thing is important. We are seeing, so I'll give you one example. A lot of trade from Saudi Arabia is done through some of the large petrochemical giants. They are experimenting to do away with LC, for example. Now, that's a digital arrangement between them and banks, and they're testing. They have already tested that product with us, and I'm hoping that product will be very soon available in the market. We have already, and State Bank has done this big service. That it used to be a time that you could not discount, you could not direct dispatch, you could not do. So exporters had a lot of dependencies, and they had to resort to things which were sort of breaching the rules. The State Bank has created that room. State Bank has created that flexibility, and we are taking advantage of that. So today, you don't need to open LCs, you don't need to export an LCs, you don't need any of that. That digital connection between buyer and supplier, that's really helping us. So we think that, like all technology, there is an inflection point. I'm not very sure if we are really there, maybe in 1 year, maybe in 2 years. All trade banks are now applying tools like artificial intelligence to detect trade-based money laundering, which is a big risk in this line of business. Now, so with this artificial intelligence, with these technology tools, I think maybe in a couple of years, maybe next year, I don't know exact timeline, but there will be an inflection point when you'll see people sitting in their offices, no runner running to bank, bringing documents, etc. We will be very soon at that stage. This scanning, etc., that is already there, but a step much better than that, a step before that. Right now, from their consoles to the ultimate buyer's computers. So that's how we think that we will, and we're planning to bring it to people's hands.
Great, great. So using AI to minimize the risk and enhance trade in the banking sector is the right approach to do. And you talked about the inflection point is to reach over there. So there's another inflection point which Pakistan is achieving, and you know that banking is about the trust between the client and the banker. It's you trust with your wealth, you trust with your saving, you trust with your money. It's the biggest trust which you have outside the family is to do with the bank. And in Islamic Jamhuriyah Pakistan, the belief structure is to do a lot with the trust. And that's why the Islamic banking in Pakistan is really thriving. One example of a bank is about, you know, Mizan Bank that started somewhere about 2 decades ago, and now it's competing with the HBL to become the #1 bank in Pakistan. And HBL is there for 70, 80 years, and other banks are there, but Mizan in 20 odd years coming to that level just because they worked on a niche on Islamic bank and they had the first mover advantage. Then we have another example of Faisal Bank, who has fully converted into Islamic, and it's a big success to see for the others to emulate. And now in this new 26th Amendment is that by 2028, Pakistan is perhaps going to be a riba-free country in that. Whether we'll be able to achieve or not, but I can see the commercial interest of many banks into the Islamic, and my next two panelists are from Islamic banking. So I like to learn about their experiences about the Islamic banking and about how this help in financial inclusion, and especially from deposit lending side as well, and creating assets which are the saving instruments for people, because many people don't keep bank in the saving accounts or on the fixed deposit because of the interest on that. But Islamic banking gives them that kind of a products, and then they can borrow on that which is in Islamic in nature. So I'd like to pose this question for my next two panelists. First, I move to Atif Hanif, the Chief Executive Officer, Al Baraka Bank. Over to you, Atif Saab.
Thank you, Ali. First, I'd like to mention that Al Baraka Bank is an emerging bank now, although we have been in Pakistan for 30 years. But it is, since the takeover of the new management 2 years ago, we are in the process of relaunch of the bank. We consider this not as a drawback, but as an opportunity. Just like a regular team building and HR reforms, we have hired very good resources from best banks in the country in every segment. But what is more important is the direction and the strategy of the bank. So we have actually, we are now calling our bank launch of a digital bank with a commercial bank license. Because we have only 170 branches. So any bank of this scale, the survival in the industry, in Pakistan industry, is very difficult for any bank with less than 200 branches. So we are not looking at it as half glass empty, but we are looking at it as half glass full, because most digital banks will be launching with 0 branches, and we will have a network of approximately 200 branches by this year end, and a complete robust digital strategy and robust digital team, which is coming up with almost every product and service that a dedicated digital bank can offer. With this, we see a lot of synergy with our main banking areas. For example, we decided to have some niche in our marketing and business strategy, which should strike us out as a different bank than any other bank. And digital has a lot of role to play in it. We started with our corporate side, and what we did, since we exist in 13 countries and we are a strong Islamic brand in many countries, so we started an inter-franchise trade portal, trade finance portal, to give access to the Pakistani exporters to these non-traditional export markets where we exist. For example, we started with South Africa. We chose 60 leading exporters from the segments which export to South Africa. And our counterparts chose 40 leading importers from that country. And we set up a portal where we uploaded all the information, and then we held a webinar between these 60 exporters and those 40 importers. And it was a very big success, and they started this B2B connectivity through our portal. We held third webinar only yesterday with Bahrain, and that also not only trade portal, but that gave access to our exporters to even have financial services of our full-fledged commercial bank in Bahrain. We are holding another one with Turkey. So this is one area where we consider ourselves as a specialist. And while the foreign banks, like you said, are no more in Pakistan in big numbers, we see that as an opportunity for Al Baraka. And what we can add as value to our exporters and to our traders, probably that's a unique situation. So, for example, we uploaded 160 leading exporters from Pakistan and connected them with about 50 leading importers in 3 countries so far. And we intend to do that with 6 other countries. So this is a matching that we are doing sector to sector. And out of these 160 customers, we only had 40 customers. So in order for any customer to be part of our portal, they have to become our customer first. So now we have added 110 leading exporters to our portfolio through this initiative. Second area where we think, being an Islamic bank, we should have a niche, although we are expanding by branches and we are expanding by sales force and every other thing that every bank is doing during their expansion mode. But it's very important that every bank of our size, in order to grow and have an ambitious growth strategy, should have a niche selective market. So what we did, we chose Hajj and Umrah as our specialized market. As you know that in Pakistan, half the people perform Hajj through subsidized government program, which is 90,000, and the remaining 19,000 perform Hajj through private companies. So in 2 years, we have, alhamdulillah, achieved 65% market share of the private Hajj companies of Pakistan, despite being a very small bank. So that is an area we are specializing in, and since we are opening a full-fledged digital bank in Saudi Arabia in coming year, so that will give us a lot of added advantage to serve not only the Hajj companies which are making payments to their vendors in Saudi Arabia, but also to the Hajj and Umrah pilgrims through efficient mode of payments, which we'll be able to do through our partner bank. Thirdly, the SME financing, we have come up with products of clean financing to the Hajj and Umrah operators to make payments to the Saudi vendors, and that is also a unique product that we have launched. While the question that you also mentioned about this conversion, I think the conversion of the entire banking system into Islamic by 2028 is probably the best thing happening to the existing Islamic banks. Reason being that despite very robust regulations and very strong people's sentiments towards Islamic banking, we were only 22% Islamic in Pakistan, despite 95% Muslim population. Malaysia, with 50% non-Muslim population, had 46% Islamic banking share. So we were not really doing well, although Mizan did the best, but they took advantage of this gap where people were more Sharia sensitive, they were more riba sensitive, and they came up with a product, a proper Islamic banking brand, and they were rewarded. But the reason this is best thing happening to Islamic banks is because there was a distortion in Pakistan's banking overall sector, that the conventional banks were basically, in my view, not conventional banks. In 1984, with one stroke of pen, when entire conventional banking was shifted to Islamic banking, the word interest was removed from the Pakistan banking sector. But in 1992, when the Supreme Court declared our Islamic banking system of that time non-Islamic, and gave orders to establish proper Islamic banking system, under which this new Islamic banking system came into being, the old system was not reverted to 1984 model. So the word interest was not reintroduced into what is now conventional banking. So in fact, what we have today is an old Islamic banking system and a new Islamic banking system. That created a lot of perception issues and challenges for bankers like me, who have spent 20 years in Islamic banking. Because people kept on saying, when our sales force and our marketing teams would go to the market, that if you are Islamic, even the conventional banks don't have word interest in it. They are still using markup agreements and buyback agreements and profit and loss on their checkbooks. So that distortion was a serious perception issue, because of people who keep on saying Islamic banking is not really Islamic because you hold your ear like this or like this. This does not happen in Malaysia or UAE or anywhere else, because we had launched Islamic banking in Pakistan twice. So now with conversion of the entire banking system to Islamic, I think we will have a very strong perception advantage.
Absolutely, absolutely. Sorry. I don't want to interrupt, but we are running short of time. But you said it quite rightly that this conversion would help the overall ecosystem to develop and all that. Just to tell you, add on to the history in 1992 when the Supreme Court took that decision and changed that. Then the Business Recorder had that headline: "It's a suicide of the financial system." And the next day, our office was burned by Banori town people. So that's part of history as well. But now the things are very different, and you're right that we were very skeptical about the Islamic banking. Ke kaan ko idhar se pakadna hai, idhar se pakadna hai, because as you said that Islamic banking was less than 10%, but now it opened to 22%, and by 2028, if it's not 100%, it move up to 50, 60, 70% on that. So with that question, I move to my last panelist, who is an old friend and colleague. We started our career together from JS. And now he's the Deputy CEO of Bank Islami, Imran Aleem Sheikh. So Imran, tell me about how Bank Islami is geared up to really grow in this way when Islamic has become the fad.
Thank you. First of all, as we have always, and everybody has spoken about financial inclusion, so perhaps I should speak in Urdu. If inclusion is the key, so हम इंक्लूजन करते हैं मगर एक्सक्लूड कर देते हैं कौमी ज़बान को नहीं यूज़ करते हुए. तो आई वुड यूज़ माय Urdu and English mix. But how can we be inclusive if we wearing the best suits, speak English, and then how would the consumer react to us? So we have to also understand from the perspective of a consumer. So at Bank Islami, answering the question first, we don't think there's any competition, because we think if the customer chooses, agar wo choose karta hai Islamic banking, wo koi bhi Islamic banking choose kare, either Mizan, ya Al-Baraka or Faisal or Bank Islami. I think that's the right solution. And as far as competition is concerned, I think on many occasions we tend to comment कि गवर्नमेंट ऑफ पाकिस्तान का ये डिसीजन सही नहीं है, वो सही. I think one decision which me and at least Atif say is a good decision is changing the entire banking to Islamic by the year 2020. That's the best decision government of Pakistan or the Supreme Court could take, so I think that's a very good thing. अच्छा, अभी इसकी बेसिस पे आते हैं इस्लामिक और नॉन इस्लामिक. अगर हम देखें कि कोई एक फार्म है जिसमें 25-30 गायें हैं और उसमें से उन सब गायों और उन सब ने सेम खाना खाया है, सेम घास खाते हैं, they eat the same food, they drink the same water, but आप अगर उन 23 को उसमें 24 में से 23 जानवरों को बाय नॉन सुन्नत इब्राहिम काटते हैं तो वो आप पे हराम है, और जिसको आप सुन्नत इब्राहिम में काटते हैं, ज़िबा करते हैं, वो आप पे हराम है. So what does it mean? It means that entire banking is on processes. The banking, as far as Islamic is concerned, is all about processes. And to your question कि यार वो family जो है, और your comment to that family के बाद banking पे trust करते हैं, I don't think so. I think family से ज़्यादा banks पे लोग trust करते हैं. Hence हमारे पास अपना पैसा और cash and gold रखते हैं, family पे बहुत कम trust करते हैं compared to banks. So we take the edge as far as family is concerned. And to the point also that will we have any competition when the entire industry will be Islamic? I think competition is the best for your innovation and improvement. If the entire industry will be Islamic, so there will be more research, there will be more innovation, and one of the feedback which we get often is that why do Islamic banks use Kaibor? I think because there will be more banking, then there can be a fair Sharia compliant benchmark which we can use going forward. And to your also comment which was on SME, and we often get this bashing that why don't banks support SME. So I think as a consumer, आपको ये समझना होगा कि only banks are not part of the ecosystem as far as the macroeconomic environment is concerned. The entire ecosystem you need the support from the government, you need the support from the judicial system. If your judicial system or laws and regulations are not supporting NPLs and recovery of non-performing loans, how would you see banks supporting NPLs or supporting SMEs? Because SMEs tend to not have the right documentation, they don't have to have the right collateral, or they don't have the right procedures and policies as far as financial is concerned. So it's easier blaming the banks that are not supporting SMEs, but we need to also see the entire ecosystem as far as the government is concerned, as far as the law and judiciary is concerned. But at the end, I would say that we are very geared up and we are very welcomed to see all my contemporaries and panelists be Islamic going forward. And we will see all these 6 gentlemen will be Islamic. And so I'm very happy.
Great. Thank you, Imran. So as you said that we trust banks more than our family, hopefully we trust Islamic banks more than the mullahs.
Yeah.
So I like to keep this discussion on, and I have so many other questions for my panelists, but the time is up, so I have to wrap this up. And do you have a comment to say, sir? You're saying something? No, just so this we have to wrap up, and we end up on this tone that the Pakistan banking sector is leaping forward a little bit, and after the privatization, there's a break because of the macroeconomic situation. But now the macroeconomic situation is flipping a bit, and you have the right ingredients to grow. The digital path, the tools are here. Like my friend is using AI tool to have a better risk assessment and to reach out a larger part of the population without having the brick and mortar branches. And the other thing, many people who do not believe go to the banking because of their belief structure, now the Islamic banking system penetration is growing, and people started believing that Islamic is becoming Islamic, and we develop more assets on through have those Sukuk light or something, some kind of a products like that. and move forward into that. So I hope when we come here in the next 2-3 years, we'll have a much more penetration of banking, and we'll have a much more concentration of Islamic banking, and people would be believing they're Islamic bankers more than mullahs. Thank you very much.
Thank you very much, gentlemen. Now, that has truly been a powerful panel, and we are absolutely honored to have the heads of 6 very prestigious banks on stage joining us today. And these gentlemen right here are the men who are truly helping to shape Pakistan's economy. So thank you for joining us. Wow, Behtareen. We will now begin the souvenir presentation, but before we break for lunch, which will be 45 minutes only, I would like to welcome on stage Farooq Amin, who is the CEO of Unity Foods, and Afsa to join us on stage for the presentation. So if you gentlemen would stand up, please. Now, could we please invite Tawfiq Hussain, the former Deputy Governor of the State Bank of Pakistan, to present the initial souvenirs. Ladies and gentlemen, a round of applause for these gentlemen. Thank you. So for our first souvenir, we would like to present Mohammed Nasir Salim, the President and CEO of HBL, his souvenir. So, Mohammed Nasir Salim. Thank you, ladies and gentlemen. Round of applause for Mohammed Nasir Salim. And next up, we will be presenting Rahmat Hasni, the President and CEO of the National Bank of Pakistan, with his souvenir. Ladies and gentlemen, please give him a warm round of applause. And then Ahmed Khan Bozai, the Managing Director and City Country Officer of Citibank. Could we please present him with his souvenir next? Round of applause for Ahmed Khan Bozai. And now I would also like to invite Basir Shamsi, who is the President and CEO of JS Bank, to present souvenirs to the other panelists. Keep the round of applause going, please, ladies and gentlemen. We are honored to have these men joining us on stage today. So, Basir Shamsi, could you please present the rest of these souvenirs? We would like to present Karam Shahzad Khan, the President and CEO of Habib Metro Bank, with his souvenir. Round of applause, please. Let's keep the round of applause going, ladies and gentlemen. Thank you. We are almost breaking. And next, we would like to present Mohammed Atif Hanif, the Chief Executive Officer of Al Baraka Bank, with his souvenir. And could we present Imran Halim Sheikh, the Deputy CEO, Bank of Islamic Pakistan, with his souvenir? Round of applause, ladies and gentlemen. And to Ali Kizar, the Director of Research for Business Recorder, could we please present him with his souvenir? Round of applause, ladies and gentlemen. I would also like to invite Rabia Ahmed, Director and CEO of Nutshell, and Farina Mishra, the Chief Public Engagement Officer of the Nutshell Group, for the group photo. Round of applause, ladies and gentlemen. Fantastic. What a panel. Thank you, ladies and gentlemen. Give them another round of applause. Thank you for being here. Okay, thank you very much. Ladies and gentlemen, I'm sure you are all delighted to hear we will be breaking for lunch now. Again, please have a speedy lunch. We'll be back here in 45 minutes to be starting at 2 p.m. sharp. A huge thank you to all of our speakers this morning. We have an action-packed afternoon. Roti kul gaya hai, everyone.